Hi guys, hi everyone. Good morning, good afternoon, good evening. Wherever you are, welcome to IC Market Webinar. Sorry, just now I was muted. Okay, so I think you guys can hear and see me clearly. Okay, shall we just say for 1 minute, 1 to 2 minutes? Alright, I will start the session. How you guys doing so far? How was your new year? Any new year resolution, guys? Hi everyone. Okay, I think shall we just begin? Just start our webinar. All right. I don't want to keep you guys waiting. Again, guys, thank you so much for joining me today. And today's topic we're going to talk about is trading roadmap, micro plus key event calendar. So, okay. So before we start the webinar, disclaimer first, right, guys? We already know that they will say this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. Okay. And they will say here, risk warning: trading forex and CFD carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading forex and CFD may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Okay. And about myself, my name is Peggy. I'm an investment analyst and a prop trader. Alright, okay, this is the agenda for today. We will talk about a few micro events that move forex gold indices most. Okay, and the must watch event calendar such as like CPI, those are NLP. Okay, how to translate them into the watch list. I'm gonna do like top down scan example to like D1 and H4. Okay, so there are a few micro driver that move markets most. Okay, so if you trade forex gold, you know that those new you need to take note of. Okay, one, we have the interest rate, right? So basically the central bank policy rate drive affect differentials and capital flows. Inflation such as CPI, PCE dictate rate expectation and gold hedging demand. Okay, employment. Okay, we have a job data signal economic strength and Fed policy part. GDP growth, economic expansion, contraction affect equity indices. Risk sentiment could be risk on and risk off, dry safe haven versus risk asset. Geopolitics event create volatility and safe haven flow. So this week, if we're gonna look at the news, we have quite a few high impact news coming, especially on Fridays. Okay, Friday we had NLP, we have quite a few, so I'm gonna show you. UTC. Okay, basically today there's no news. Basically Tuesday no, but tomorrow for US dollar we have ADP, PMI, and job opening. Okay, and January 8 another one for the US dollar. If you like to trade gold, you need to take note of this news. Okay, which is like have the US dollar here. We have unemployment claims. Okay, and January 9 Friday we have 1 2 3 4 5. It's about 5 news that will be affected US dollar. We have average hourly earning, NLP, unemployment rate, and we have consumer sentiment, and we have inflation. It starts from 1:30 p.m. to 3 p.m. UTC time. The time zone you change according where you live. Okay, I'll stick to the UTC. This is high impact news. Make it a habit, like every day you want to trade, just look, go to Forex Factory, or you can go to the investing.com and look for the high impact news for the day. Okay. Okay. Let's remove this first. And the interest rate. Jamie Rules, good day to you as well. Interest rate, so the primary forex driver. Okay, why rates matter. Higher interest rate affect foreign capital. Rate differential drive carry trades. Central bank expectation move market before crucial changes. Impact go inversely opportunity cost. Okay, so whenever we heard about the news, so what is the market impact change, right? Rate hike, currency go up. Rate cut, currency go down. Okay, is the hawkish, what is how to pronounce this? Hawkish. Okay, indices go down. Okay, gold also go down. It dovish, indices go up, and gold is go up. Okay, this one talking about the interest rate. Okay, and March what the event calendar. So every time, okay, because I'm a day trade, so every time I'm gonna for day first, whenever I open the my computer, I'm gonna look for the news first for the day. Because I just use one website, which is Forex Factory. But like I just mentioned early on, some of the traders are using investing.com. So you just pick one. You want to look at the Forex Factory, or you want to use investing.com. You shouldn't like use two. Okay, just pick one and stick with one. One of the things is that the central bank meeting, we know that we have a Fed, which is US dollar. We have a FOMC. We have a ECB, which is like Euro dollar. We have a Bank of England, BOJ as well. BOJ is the Bank of Japan. Okay, rate decision forward guidance frequent 6 to 8 times per year per bank. So whenever I see the news that have FOMC coming up or BOJ, if you want to trade yen, you should avoid that, or BOE or ECB. Okay, you should avoid EURUSD, anything that pair with EU, Euro. This one you should avoid anything that pair with pound. This one anything that pair with yen. Okay, and FOMC anything that pair with US dollar, you should avoid that. CPI inflation data, we have for the US CPI, core CPI, and PCE. Determine rate path expectation. You see the 3-star, this is a high impact news. Okay, employment report. Okay, which is we're gonna have this on this. We're gonna have this report coming on this Friday. We have an NFP. We have unemployment rate, wage growth, economic health indicator. Okay, how is that? It's actually it's a monthly first Friday. It's the first Friday of the month. Okay, basic usually the first week of the Friday. Okay, and we have a GDP and PMI growth data, manufacturing services PMI, economic momentum. You're gonna see these are quarterly for the GDP and monthly for the PMI. Okay, and typically monthly event flow, first week, which is first Friday, we have NFP. Okay, and then we have ISM. Okay, manufacturing. Week 2, you're gonna see the CPI data, typically 10 to 15 of the month, and then you have a retail sale. Week 3, usually you're gonna see FOMC meeting, which is 8 times per year, and housing data. And week 4, durable good and final GDP, which is quarterly. This one I'm talking about US dollars. Okay, this is high impact news. I know that I myself, I think you also like to trade gold. That's why you need to take note of this news event. Okay, and how we're going to translate those micro or news term into the watch list. First, what you need to do, you need to identify the themes, right? Example, Fed pausing rate hike plus inflation cooling. So step 2, you need to determine the impact, which is US weakness, rate differential, narrow, gold strength, lower opportunity cost. That's why whenever the rate cut, right, US gonna fall, gold gonna rise. One of the things, they are negative correlation. Okay, risk on sentiment indices vary. Okay, read on and read off, you guys should already know. If you don't know, you let me know. Okay, build your watch list. You have forex, EUR, USD go up, GBP go up, USD Japan go down. Okay, gold is XAUSD go up, gold minor also go up. Indices S&P and Nasdaq, Russia 2000, it also go up. How you gonna do the watch list? You can just follow me. I mean, you can just copy. Oh, finally gold is falling. It's just one thing sideways. Here's my watch list. You can do like that. But if you just ask me, because it's my work, right? So I'm gonna use all of I'm gonna like do all this, but I only trade EUR, JPP, and gold. That's it. Okay, so you can just do the crypto, major, and then the community and indices. Okay, so you can just do like that to your watch list. Okay, that's why whenever we're gonna talk, let's just say we look at the dollar, my dollar here, right? You're gonna look, dollar is rising and now come from the support level. Then you will see that EU is gonna be falling. They come from the resistance. GU also falling, and gold now is falling as well. This from the resistance, meaning now dollar is a pullback or bounce off from the support. Okay. Okay, common micro themes watch list. So whenever you say risk of scenario, trigger, recession fear, those geopolitical crisis, buy, okay, US dollar, JPY, C-shape, gold, and what is this? This is should be VIX. What is VIX? Where those are the media, or is a stock. Okay, you buy and then you sell. What do you sell? You sell EUR, GBP, Aussie, indices, and crypto. So you need to watch US GBP go down, S&P go down, and gold is go up, because this is risk off, right? Risk on scenario, which is trigger, strong growth, and dovish threat. You buy EU, GBP, Aussie, indices, and crypto. You sell. What do you sell? Dollar, JPY, C-shape, gold, and stock. And then you can watch list the Aussie dollar go up, Nasdaq go up, and gold is go down. Meaning that the investor, they Happy New Year to you as well. How to pronounce your name? Nenkai. I don't. Let me know. I don't know how to pronounce your name. Okay, anybody knows about risk on and risk off, right? So basically I just talk about risk on. Basically it refers to the market environment where the investors are confident and willing to take more risk in pursuit of higher return. That is the risk on. And the risk off, what does it mean, risk off? They say that risk off is describe a market environment where investors avoid risk and prioritize capital preservation. Okay, that's why gold is go up, because gold is a safe haven, right? And reason they sell off gold or they sell off dollar as well, and then to go and buy those crypto or maybe indices or dollar, EUR, and GBP. Okay, this is what they prefer. Okay, and strong dollar team. So they will say that Fed hawkish, right? US outperform. You buy dollar, USD, and USD C-shape, and then you sell EU, you sell GU, you sell gold. Okay, that's why dollar is go up, gold and commodity is go down. Like just now I show you, because they are negative correlation. Just like, you know, you buy the dollar, you sell gold. Well, you want to sell gold because you want a dollar, right? Then you go and buy dollar. or you just sell off dollar because you want to buy gold basically. But sometimes the market or investor, they want both. Okay, there is sometimes they have kind of positive correlation. Investor, they also want dollar and then they also want gold. That's why sometimes you see, look at the chart, gold and dollar is moved the same direction, but right now about 80% they are negative correlation, which is they just move again opposite direction. Okay. Inflation surge themes trigger hot CPI, supply shock, gold, commodity, and those like real estate or stock. Buy, okay, you buy and you sell those like long duration bond, growth stock. Gold is go up, stock is go down, energy is go up. Okay, top down analysis framework. So what you need to do, first thing first, micro event. Okay, you need to look at the new growth cycle, inflation trend, central bank policy. Okay, if you're gonna ask me, okay, I just skip about 20% for those like fundamental, about 80% more to technical. Okay, so I'm not really like purely based on the fundamental when I trade the forex. Okay, but of course it's not that. Okay, when we trade the forex, okay, fundamental 10%, maybe 20%, okay, maybe 50% about technical. What about, no, maybe 30% about technical. What about another 50%? 50% is about trading psychologies. Okay, why? This year, okay, for 2026, if you want to be profitable trader, what you need to improve, you ask yourself. If you think that you know so many strategy and then you cannot be profitable trader, meaning that you need to go and learn or read or improve the trading psychology, your mindset, your kind of inner peace, or be confident on your setup. Okay, because I know that, for example, like whenever you open a chart and then you have nicely planned for your setup, but when price is rising or approaching your setup with the zone, okay, sometimes you hesitate to place the entry because maybe you that fear or you have the confidence or kind of thing. So you need to kind of try to try to work with your inner peace. Okay, that is this year. I think I have like a few things that I want to improve in 2026. Okay, and trade less. Okay, look for more quality, not quantity. And market sentiment, like I just mentioned, we have risk on and risk off. Okay, we have those like credit spread or flow or stock, asset class selection. So you just look which market align with the micro themes, right? If you gonna look for those like Bank of England or those like here, what's that here, ECP or BOE, we know that this is those like Europe or London section, and then you look for the new BOJ. Mostly it's like, okay, usually for the BOJ, whenever I see they don't give us the specific timing. So that's why whenever I see the BOJ on the day, I don't trade anything that pair with yen, because you know Bank of Japan, they like to intervene the market. So I don't trade at all. Whenever I did not see like, you know, they don't tell specific timing, I just avoid that. Okay. Pair and instrument selections, strongest versus weakest within asset class. So you should just pick one to two. I think in 2026, if you like to trade so many pairs, 3 and 4 and 5 and even 6, I think you should just focus 1 to 2 or max each 3. Okay, I will trade 3 pair, right? EUR, USD, GBP, USD and gold, because they 85 to 90% they move the same direction and they are negative correlation with the dollar. I only focus in 3, even though at my work I have to like, you know, find the key level here. Right, look at this, all the pair up to somewhere around this. I need to look for the key level because of my work, but I only trade 3 pair. Okay, I only trade 3 pair, the rest I don't trade. Okay, I only trade 3 pair, and right now gold is already falling, guys. Okay, this is bounce up very strong. I got short just now from here. I already closed because like from here I closed it bounce off. So right now, okay, since gold is somewhere here, they are being sideways. Either you can wait for them to, like, you know, break out of the box. Basically right now gold, see, I'm looking here, gold is ranging. Okay, and this is my sell zone, first resistance. Okay, and the time frame and entry, okay, D1 and H4. Okay, because I'm a day trade, so I look at the D1 because I just want to see like where is the key level for the D1 time frame. And then D1 daily candle is closed with bearish or bullish, which is yesterday gold is closing with the bullish candle is really strong, but it just I sell for the short term because that's the resistance level in H4. Okay, and then you can identify the key level in H4, but our entry is at the M15 or M5 because you need to look for the confirmation. Then you can have tight stop loss. Okay, I shared with you guys before. Okay, where is my entry on how we're gonna look for the those like confirmation. I will show you again later. Happy New Year to you, Ajay. Yeah, this year I was in Singapore. I did not go anywhere. No, this year, last year. Okay, in the past year I was overseas, but for the past 2 years I was in Singapore at home, and I just count down my bed. Actually, I already sleep. Okay, your daily weekly scan checklist. So what you need to do: weekly review. Okay, check economic calendar for the high impact new event. Yes, I do that. You tick. Okay, review central bank commentary and rate expectation. Yes, tick. Identify dominant micro theme, risk on and risk off. US strength. I'm not really like, you know, focus on this because I only want to see, like, for example, like what is happening when FOMC, or is it going to another red card or anything. Okay, I just kind of like, for me, good to know. Okay, but if you love reading the report, yeah, you go ahead. Okay. Oof. And build watch it based on the themes. D1 daily scan D1. So review D1 charts of watch it pair. Mark support resistance. Yes, I do that. I tick. Okay, this is what I do every day. Yes, yes. Check H4 for entry setup aligned with the D1 bad. Not really because I'm day trade. So my entry is at M15. Okay, my key level in H4. D1 I look for the candle. Okay, and then after that you already identify the zone or the key level or the setup, then you can set alert for the key level. Hi Karims. Yeah, happy new year to all, like everyone that's join my webinars. Okay, and I wish 2026 is gonna be the best year for all of us. Okay, definitely, and review. Okay, oh, this is all for today, guys. Okay, we quite quick today. You have any question? You have any questions? So these are my last slide. Okay, oh, okay, I'm gonna show you how we're gonna do that, right? Right here. Okay, for example, okay, my watch it today, I want to trade gold. So what I'm gonna look, first thing first, I'm gonna go to Forex Factory, which I want to see is there any news today, which is where it is just now. Okay, where the time zone you change according where you live. Okay, if I'm gonna look at Singapore because I'm based in Singapore. Okay, but right now I'm just use the UTC. So right now it's about 9:07 a.m. in the morning. Tuesday, no news, so okay, I don't need to, like, you know, concern that much because there's no news. But tomorrow, if you like to trade the Aussie dollar, yes, 12:30 a.m. we have the news coming up, and US dollar we have 1:15 to 3 p.m. Take note of this high impact news. January 8th we have unemployment claim, and Friday we have about 5 news event for the US dollar. These are high impact news. So again, I know that some of you guys will take the orange color. It's up to you, okay, but I personally just look at the high impact news, which is the red box only. If you want to include, that's fine as well, okay. This is the one. And after that, I'm gonna go to my chart. If I want to look at gold, I just want to I look at gold first, okay. Like I go to D1, okay. I want to see what is happening. I know that goes on uptrend. I know that's going on uptrend, but of course you're gonna see that goes to pull back, but pull back to which level, and then we don't know. Then we need to use those like technical that we have learned, okay, to find the key level. D1 time frame, of course I know that D1 is closing with strong bullish candle, but we go to monthly first. The month, which is if you join, oh no, I did not do the pre-market. I do pre-market like not this week, last week, okay. Basically, okay, first we know that monthly time frame closing with bullish candle, but there's a wick here. The body is about less than 50%, so we have no idea whether this one is going to close with bullish or bearish. The thing is, because it just started, it's just the first week of the month, so what we're gonna do, I'm gonna just pick this one stick, and then I'm gonna put that into my ATH, okay. And then we go to weekly. Okay, weekly, lovely. Weekly time frame closing with belly in gap, right? And then we would identify, and then you mark the zone. This is our zone to sell, right? This is bearish OB, and then you can just mark this at the week. You take note. Boom, boom, boom. Make it a bit bigger, okay. And let me put somewhere here. And after that, I go to D1. D1 time frame. So this is our zone, right? It's the red box, but the zone is so big. Where is our entry? Right, then I go to H1, D1, I'm gonna mark. We have another, within OB, we also have another OB for the D1 time frame. Then you just mark, okay, right? And I go to H4, which is H4 is the one that I'm gonna identify the key level, okay. So my first resistance is right here. This is my first resistance. Why I pick here? I draw the body and not the wick, okay. It is very important that you need to know how to identify the key level, support, resistance, demand, and supply, okay. This is a foundation for you guys to trade like other technique. You need to know how to identify, okay. Here H4, before that closing very strong rejection. This is another H4 time frame. It seems like they're going close with another price action as well. Label the countdown. It's about 27. Okay, you see that this is really nice resistance level, okay. So this is our sell zone. This is my sell zone. This is my first resistance, and my second resistance somewhere around here. And of course, I know there is a supply zone about this level. So basically, I have two sell zones, okay. One at the first resistance, second one was at this one. So this is my key level for today, okay. So right now price is go at about 75, 44.75, and then falling and closing below 70 and falling right now. What is my support level in H4? It's here. This is my first support. I'm gonna draw at the body, but of course, right, whenever the zone, we're gonna draw at the wick and the body. This is our support zone or area of support level. I don't want to call it, right? Even remember, we still have the gap here. What you're gonna gap up. Before that, on 29, it is 29. Is it 29? That's a gap up here as well, right? M15 gap up, and then it take on January, which is market open gap up, should be Asia high, right? If the Asia high up, then London also go up, right? And after that, at this resistance level, they sell. Then New York, right, they sell up, and this is gap up, which is this Monday, okay? And maybe, I don't know, maybe they might want to come on this Friday, or maybe today, I don't know, because sometime, not sometime, it is last Friday, gold is very crazy. Look at the daily time frame, like you see that it take 1, 2, 3, 4 days to hit the ATH, and they take 1 day on December 29 just to sell off gold, just before the end of December, 1 day to boom. How many? This is 2,500 pip. This one they are showing you in points, okay, meaning you just sell at the ATH one lot, okay, and then you hold all the way down, you would have earned to like 25k US dollar with one lot size, okay. It takes 1 day, boom. And right now in H4, okay, here, right, the zone. So our entry, what we're gonna do? So right now you go to the M15. I know that M15 they are being ranging. So what you need to do, you need to wait for them to break above or break below. Okay, but M15 already show me the entry. Right, this is the box, right? So if you sell here, you should happy already, because it's more than 2,200 pip. It's about, you see, or the below is almost 250 pip the first time, and then price bounce up. Either you will say that this is the support level at the wick in the body somewhere around here. Okay, like you sell, you buy TP at the swing high here, price slightly went up, okay, and then falling. So right now if you want to sell, okay, I have the sell zone for you based on the supply. This is going to be the zone that you want to sell. Then if you want to sell, okay, stop loss you put at this is your stop loss, tight stop loss, okay. You see our tight stop loss, where is my stop loss, okay, and this is going to be your sell zone here. The price rising here, okay, and this is gonna be your sell zone. I'm gonna give you, if they're rising, but if they're really falling and then they break the body close below 52 or 50, then you wait for the pullback and then you sell, meaning that H4 is gonna close with price action with the long wick, with the body will be red, okay. Get it? The body will close like that on the box, meaning if the body close like that, okay, meaning that this zone or this one, okay, if we're gonna like, or maybe this one somewhere here, they might become like chain of character, right? And then after that, what you need to do, the plan, you wait for pullback here, you sell one. If they don't pull back there, first you might sell, you will say, okay, I'm gonna sell the neckline one, there will be the neckline here, and if not respect here, and then you wait for another to go to this zone and then you sell. So you have the sell, you have the plan that close below first. So right now you don't need to do anything, you just sit down and watch the graph show you. Okay, no need to have a FOMO. Don't jump into sell, don't jump into buy. Okay, you still have how many days? One year we have like more than 300 days to trade. Okay, so let it close below first, then you wait for price to either bow to here and then falling, or it might go to this zone and then falling. Okay, so right now they are in the sideways. If you did not sell at the 44.75 at the wick here, and then you wait for the pullback, stop loss gonna have a tight 75, or you can put like 78. If you short here, you can put 75 or 78 stop loss. Okay, and also M15 my entry, I saw the divergence as well. What about M5 doing? Okay, M5 as well. M5 divergence in here, and that is bearish divergence. Okay, so right now just wait. Okay, wait for the candle to close. Okay, this is just for the key level. And also, if you think that if you do analysis and go on the elite wave, right? Okay, they're gonna be the pullback one, either this is the wave one, two, three, four. Wait, 1, 2, 3, 4, 5. This is should done already. 4, 5 there. Okay, and then we also have another one, 2, 3, 4, 5, 3, 5, or this have another 1, 2, 3, 4, 5. 5 here. After 5, either 1, we're gonna see it is gonna be A, B, C here. Okay, or 1, 2, 3, 4, 5, 1, 2, 3, or another 1. Okay, you're gonna see the pullback. Okay, so based on the trend line or the trend line here, able to count either 1. Okay, 1 would be either this will be 1, 2, 3, 4, and this go 5. 1 is like that. Okay, or this one is gonna be the after 5 you're gonna see the A, this is gonna be A, and this is gonna be B, and after that go C. Okay, so we don't know right now. And this one price is at the extension 127. Okay, meaning that here extension 127. Also, why I say this is going to be like A, B, and C, because this is end of wave 5. Wave 5 is here. You might see the A, B, C here, or this is going to be either A, B, and C, or this is going to be 1, 2, 3, 4, and then 5 go there to make a like the new all-time high. I don't know. Okay, so you can just leave it like that. We're gonna look in the monthly. Okay, some of the broker, you need to look for the like the data feed also. So we're gonna look okay, I think I'm gonna use the okay, look for the monthly time frame. If I'm gonna count in monthly, I think I cannot. I think I'm gonna count based on the weekly. Okay, for the weekly, I think I can see the wave. How I can count the wave like this? They start in January 2020. I think I cannot count the wave. Let's just say if you want to use the IC market in the channel. Okay, wave 1, 2. If I want to count 1, maybe 2 here, 3 should be here, 4 and 5. That in the future. Of course, gold gonna be expensive, right? Based on the channel, and then from 1 to never I do for you. There may be 3 all the way 10,000. I think we're gonna see go to the 10,000. Where is the and from the week, from the day? I'm gonna look here to go 1, 2, 3, 4, 5. This could be 3, 4, 5. Then I have another 1, 2, 3, 4, 5. One, 2, 3, 4, 5. Okay, this one is this one when they are doing the ABCDE, and then they break out, right? ABCD, after that you see the breakout. Okay, anyone still remember if edit wave, right? If wave 2 is sharp, wave 4 is gonna be sideways. If wave 2 is sideways, wave 4 is gonna be sharp or zigzag. Okay, I'm not an expert. Okay, I could be wrong. I just count what I understand. Okay, after that we also have another from wave 4 to 5 there. We also have another, I'm gonna count from 1, 2, I will count from here 1, 2, 3, 4, 5. Okay. Okay, remember that wave 5 you also have the sub wave. A, B, C, 3, 4. Okay, so anyway, go back here. Okay, I'm gonna identify again my resistance level here. We're gonna use the IC market for the chart. I'm gonna use the fib level. This is to be the zone. So basically my zone was here. I think next hour you can look for the sell entry already for gold. Okay, the zone, right? 61 on a 78.6%. That's the zone. Okay, and the next resistance, actually price is almost go to my this resistance level. second resistance, first resistance. Okay, D1 OB is here. Okay, support level is here. Yeah, if H4 closing with valid in gap next hour, you sell. You wait for the pullback in the lower time frame and you sell. Okay, 50%. $3.2. Why remove? Because if I keep everything, it make my chart very messy. Okay, so if next hour wait for the pullback, then you sell. So I think right now in the lower time frame, price is about to break a breakout of the sideways, right? This is our sideways, they break out already, so you wait for pullback. Okay, you wait for the pullback, right? Pullback to where? One is actually they are pullback at the week just now here, the zone break, but let's just wait at this supply here. So that would be the pullback. You don't follow sell. Okay, sometimes you follow sell, yet price may fall like 1,000 or 2,000 point or 100 people, 20 people up to you, but that is going to be your bad habit, because if you keep doing that, sometimes price may just pull back first, then sell off, then you make it stop out. Okay, so what you need to do, you just let it go, and then you just wait for another 10 minutes for H1 to close, right? In M15, you see that if H1 close here, this is going to be your sell zone, or from 55 to up to 65, that's going to be your sell zone, or at the OB here, or supply zone again, could be here again, or somewhere up at least 4450. You wait for the pullback. Okay, you don't need to like FOMO, wait for pullback somewhere here and then you sell, or go to there, the zone, and then you sell. Either one. Okay, so right now it's already sell off, so I did not do anything. Okay, I am gonna wait, just be patient, let it go, don't follow sell. Okay, it could be here or could be here, because it's eventually break out of the range. Okay, you see that? So right now they create the supply zone here, so you can wait. One is wait. Let's say if did not pull back, okay, and then you just all the way to the support level, what you need to do, it's okay, right? Just wait for the next setup. So where can you buy? Where can you buy? So right now it is the structure has changed based on this entire move, the M15, right? We can say that price make a high, equal high, higher low, higher high, higher low, sideways, higher high, higher low, higher high, equal high, and where can we say this is a low and equal high, and the break, the pullback in the lower time frame, and then falling? What do you think? The structure has to be like that, right? Higher high, higher low, higher high, higher low, equal high, lower low, pullback, then you sell. So it's going to be your sell zone, so you wait first. Okay, you wait first, then we sell together. Okay, we have another like 7 minutes. Like close, pull back, then you sell. You sell, okay, you sell here, stop loss you put at 4475. 4475 or the M15, you can put that, yeah, your stop loss would be at the recent swing, which is somewhere here. This is your stop loss. Where is my stop loss? Oh yeah, okay. So I'm gonna go for short. First entry somewhere around here first at like 50 4455 or 4450, depend. Okay, the stop loss gonna be big, right? If you see the rejection, then you sell. Okay, you target at this swing low, risk and reward 1 to 1. And but let's say if they not respect these zones, then you can have another short entry, which is at the neckline, which is another 100 pip, another like 50 pip above at this neckline, which is at 59, somewhere around there. TP still the same, SL still the same, risk and reward is 1 to 1.5. Another zone, which is, if you don't see any rejection, the last sell zone, that gonna be the last sell zone, that would be, I'm gonna go for this 62 or 60 in between. Okay, and then it's out of short. This one. This is our plan. This is my plan. So basically, first entry, no, first entry, first entry is a pullback. You see the confirmation. You add, you can just put like 4450 to 4455 between, and second entry is another 50 pip above 69 or 60. And the last one is going to be here. Stop loss the same. Risk and reward more than 2 to 2. Okay, this is a 1 to 1.5. This is a 1 to 1 to 2.2. This is a 1 to 1. So this is the plan. Where I put my take profit, I'm gonna put at this TP at the body, not the wick, just to make sure it's my take profit. So first, second, third sell. First, second, third sell. So you want to enter all this, then you just calculate your lot size, and then based on your capital. Okay, this is how we're gonna do. Stop loss, I'm gonna put at recent swing high. Okay, if you think that, oh, 765, I think you can make it, you want to move above and up, that is up to you. The meaning that risk and reward, then you should adjust your lot size. If you want to have like further stop loss, reduce your lot size. Okay, or you think here, if you put like above the box and then you aim for this OB, it's okay, it's up to you, but usually I won't do that. Okay, I'm gonna put at least a swing high. Okay, and then I'm gonna see, I'm gonna wait. Okay, right, wait for the pullback, sell, wait for pullback, sell. Okay, that's our plan. Any question, guys? Okay, so this is my setup for XAUUSD. Anyone have any instruments or any pair you want me to look for the key level, please let me know, guys. Be happy and be ready for 2026. Might have like positive energy. Okay, to me, if I don't get the trade like today, I'm okay. At least my capital is still there. Okay, rather than you chase the market, right? Then you feel like, if you want to have the kind of feeling like you're gambling, you can do that, but I think it's not for the long term. Okay, so for 2026, we want to be a profitable trader, so just wait. Anyone, we have 3 minutes. Want to request, guys? You still with me? Yes or no? Anybody send me the message? Anyone? Nobody? oil, the WTI. Why am I the WTI is here? Oh, just now, what happening here? Croy, what happening here? Okay, let me look for it. Is WTI, right? Oil. Okay. Support level. It is support level. I don't want to identify this as support level for the monthly. To me, for the monthly, the support level is somewhere around this level, and of course I'm gonna draw the zones. You request so many, I'm gonna end my webinar already, guys. That's how you why you don't request. Okay, I'm gonna do the quick one for you. This is the resistance for the monthly time frame. Okay, and of course we still there, we still see it seems like they're in the bearish move, right? Potential, this is my 40, 45 or 42. That's going to be the support level for the week, for the monthly time frame. Okay, then we can say that is the bearish channel. Weekly, okay, I'm going to look at the weekly time frame as well. Okay, for the weekly time frame, I'm going to adjust the level. This is going to be the first. I'm going to do the quick one. Okay, first resistance, second resistance. Okay, and we can put this one for the swing low, multi swing low support level at the body. Okay, first support, right? D1 time frame price has already went to this supply zone a few times. So basically this is the key level, I mean the resistance for oil in D1 time frame. Okay, so that's first resistance, and this is the zones. So basically if you want to sell again, you need to have very tight stop loss because it might break. It might break. You put above this swing high. That's all. First resistance. Second resistance for the D1 is here. Okay, this is second resistance, and the next resistance is here. So right now you're gonna look at market structure. They still make the lower low, lower high, right? Quick one, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Gonna go like that. Then you need to watch out. Okay, if they break first resistance from this one, then they're gonna make the market structure shift, right? If they break, I'm gonna go here, I'll pull back, then if they break, continue to go bullish. Okay, but yesterday price come with really strong support level with closing with bullish end gap. Okay, right, pull back and then you buy. So you want to sell here, risky. Okay, price may rising at 70% cross above with the momentum is a bullish as well. So this is can consider the liquidity. Don't sell here, you monitor first. If break, pull back, then you buy. Okay, this for gold, for the oil. Quick one for the Aussie dollar week. Where the high of the week? The obvious high is here. Okay, D1. What we're gonna do with the D1, the D1, this was the resistance somewhere, and price has already broken, breakout, break, pull back. So okay, I'm gonna pick next resistance in D1 somewhere around here. how many percent? Exact extension 127. Okay, 127 right here. This is the first resistance. Okay, if price break, and also for this entire move, projection 127, 100%, right? That's 100% here, that 100%. So you can sell. This is your sell zone. 78. Your sell zone is that 0.6796. 80%. Okay, confident, but I don't say 100%. Okay, that's gonna be the zone, but primary reward from this level though. If D1 closing with the bearish candle, I think tomorrow you can sell based in the divergence. Okay, I think they're gonna make the divergence right now. Okay, H4 have the break. Okay, so if you want to buy for support right here in H4 time frame, this is the second support. Okay, in H4. So basically you wait for price to pull back, then you buy. For TP in H4 first, I'm gonna use the in the entire move. Okay, first resistance for day trade. Tomorrow you need to identify the key level again. This one I'm doing setup in H4, which is actionable within the day. Okay, then the next resistance level refer to, yeah, somewhere around this. This is going to be the second resistance. So this is the key level. I'm gonna do the quick one. Okay, you wait for pullback, you buy, and somewhere in H4 there might have the FBG between, so just take note of that. Yeah, okay, wait for pullback and then you buy. Then one more. Okay, yes, still here in 20 this week to be a profitable trader and a night objective up. Yep. And EU key level. Where my key level? This is my first resistance. I'm gonna pick here, and I'm gonna use the retracement to find the level. This is 61.8%. Okay. Actually, if we want to include, there is a zone. This is the zone. Right. Okay. The zones, and this is my first support. Okay, second resistance is here. So in between, price of closing back in gap, if you want to sell, you can sell at the OB, pull back at the OB, and then you sell. Okay, it's the same, right? In the lower time frame, if you want to sell, pull back somewhere here, then you sell. Okay, somewhere around these zones, around these zones. Okay, stop loss put above this swing high. You can target here for the M15, TP1, and then TP2, somewhere out this second support for the M15. Okay, target here first. So now what you do, you need to wait for pullback. It's the same like go, wait for the pullback. And the last one, BTC. Okay, you guys can capture, right? I'm do a quick one. Okay, the key level monthly. Oh wait, this is monthly time frame. When you see the pullback, what happening here? Why have like that? What did I do? Reload. Okay. BTC. Monthly BTC. Okay. The support level monthly here 70k. Around that zone. Okay, this is a support resistance. You wait for price to pull back, you sell. Okay, this is weekly look like, right? Price have broken this low. Okay, you wait for pullback and then you sell BTC. Exact 50% fib level, around 102k, around that the price. If you want to get the zone or 100k, I go to H4 and have a look, or D1. Okay, D1 time frame, D1 time frame, D1 time frame. I would adjust. Okay, and then I'm gonna mark at the zones. Okay, somewhere around right here. So what you need to do, if you want to buy, you wait for price to pull here. This is gonna be your first support. This is gonna be your intermediate support level, meaning you monitor the zones. Okay, this one is like you to be the resistance. Okay, if they break or pull back, you monitor. By right, this is our resistance level, but this is close, they might pull back and then you buy. But I think they're gonna break. Let me adjust the level in H4 support right here. Wait, okay, 89 or 90k. This is risky though. First resistance. Okay, I will put this in my first resistance in H4 exact. Okay, then the resistance level you monitor. I'm gonna put this one as my first support, and I'm gonna put this one as my second support, right? How many percent? No. Okay, this one, right? You see that this is a demand zone, right? Whenever demand is a rejection, it's a read off. So I don't call it a demand. It's a first support. Okay, and if they break first resistance, okay, in H4, I think I'm gonna do in the. I'm gonna adjust based on the level. Let's just say 100k. Okay, 100k. That's gonna be the level, the key level for the resistance. This is gonna be my second resistance level, guys. Okay, I'm gonna end my webinar soon. That would be off it 100%. Okay, this is my key level, okay, in H4. But if you want to highlight the wick and the body, that's going to be the zone 100k to 99, around that. Okay, if they break above this, it's somewhere between, you can leave it around that zones, around that zones. Okay, can go to 100k. It can go here, pull back. If they break, if they break this resistance, I'm gonna go wave 5. Okay, just a quick one. Then we're gonna analyze again that tomorrow for H4. Okay guys, that should be all for today. Okay, what webinar are you recommended to build strong foundation, please? You just come and join my webinars, because every webinar I will just show you guys the trick how I enter my trade, and then I will just combine this and that, then you can learn from me. You just pick here and there. Okay, just if you're free, just attend the webinar every Tuesday, because I will share with you guys from those like foundation until advanced, those like elite wave or IDT, SMC or harmonic pattern, or how to identify the key level correctly. Okay, and of course, okay, how to improve or look for the key level, like what I do like really quickly. You need to practice every day, because whenever you get used to it, right, you look at the first glance, right? For example, for example, I want to look, when you look at the charts, right, you train your eyes, you're gonna know already where is your support and resistance level. If you cannot find, you can go on a higher time frame and look for the structure. We look for the structure because we want to know whether price on bearish or bullish. For you, AUD, CHF, I know that in the bearish move, right? Because D1 price still lower high. But right now, a quick look, they are in D1. I would say they are doing, they was being sideways since here. They are being sideways and then they break, right? Like here, right? They were ranging, and after that, what do you see? They break out. This breakout. After that, they'll kind of pull back to this level. One, it could be at this zone, right? Pull back and then continue to rise in the D1. It's what ranging. Suddenly break, then you wait for pullback and then you buy. Maybe in H4 that will be the entry for you. Yeah. This is the resistance, pullback somewhere at the support level. You can see. Okay, so basically you can go on a higher time frame and then you can identify the key level in H4. Alright, you're welcome guys. I hope to see you guys again next Tuesday. Oh, by the way, this coming Monday morning, my time zone is morning, is about 5 a.m. I'm gonna do the pre-market. Okay, so if you want to you know, stay ahead of the market, just come and join pre-market. I'm the one who doing. I think last Monday was my colleague Woon Hong, and this time gonna be me. Okay, so my time zone is 5 a.m. okay, so I woke up at 4:30 to prepare. Okay. Okay guys, that should be all for today. Thank you so much for joining me. Okay, all the best and good luck. See you again on pre-market and Tuesday next week. Bye for now guys, take care, bye bye.